Hi, I'm Stock Investor Davis. Welcome to the channel and please subscribe. I want to cover a stock that I've been following lately, SuperMicro. We have here. It's been going through a lot of ups and downs recently, and so I thought it would just be nice to kind of cover it. This is more or less what it's been doing during the month of February. So I have some highlights here on the top. We have they had a big rise, which mainly was revolving around its earnings, having very high earnings and revenue growth, plus a price target given by Bank of America of $1,040. That definitely helped it have this big rise up during the first half of February. Then we saw this big crash happen, and mostly this revolved around NVIDIA's earnings. There was a lot of expectations there that people just weren't sure were going to get met, and so we saw a big drop. Then all of a sudden it came back up, roaring back up, once NVIDIA actually proved that they were able to meet those earnings and actually beat them. And then all of a sudden we see a pullback, which not much support can back why it pulled back. The only thing that I could find is that they issued these convertible notes for $1.5 billion. That's the only thing that kind of newsworthy that happened that could have caused a pullback. But again, I don't think it warranted that type of pullback. But again, let's just dig into these items and I'll give you my feedback on it. So before we actually go into each of these little ideas of these big ups and downs, I have here the daily chart. And if we just focus on more so the past 4 or 5 bars far on the right side, you can see the earnings that was more or less on the far left. They announced earnings on January 29th. So this big rise up, that was mainly due to their earnings. They had very high earnings. They showed high growth potential in terms of revenue and earnings per share. Then we see that big red candle down. That's the NVIDIA earnings as far as we can tell. Then we see a jump back up, that green bar, the furthest green bar to the right. That's that jump up after NVIDIA's earnings proved to be successful. And then we can see it actually pulls back down again, which again, all I can tell is due to its wanting more money and in fact using convertible notes to achieve that money. So let's actually look into these ideas a little further. So here, the big run up, the big rise, primarily due to its earnings and revenue growth. You can see the little bar chart on the top left. That shows the revenue that it was making each quarter. And that big bar on the right, that $3.7 billion in its most recent quarter, that almost doubled what they did in the previous quarter. And what made it extra special was that management was just guiding for, definitely a nice improvement between $2.7 and $2.9 billion in revenue. But then they dominated that growth and actually went up to 3.7 billion. And what even helps them even further, if we now look at the graphic on the right, the top right, they've actually increased their guidance. So number one, they're actually projecting their next quarter to kind of remain flat, but actually improve a little bit. We have revenue guidance between 3.7 and 4.1 billion, which is, again, phenomenal for this company. Year over year, it's over double. And to just even maintain right now at this pace, quarter over quarter, big win for this company. Then what I have highlighted there is the full year's guidance. Prior to this quarter, they were guiding for about $10 billion for the full year. Now it's up to between 14.3 and 14.7 billion. Who knows if that's going to rise any further? Possibly, but we'll just wait and see for now. But again, that just kind of shows the high potential here with this company. Then on the bottom, primarily it was driven by Bank of America. People will say that they established a price target. They just started following SuperMicro and they issued a price target of $1,040. I also included a Rosenblatt Securities. They also issued a price target of 1,300. They were the highest price target. There's a couple others. I think Wells Fargo is in there around 960 as a price target. And there's another one in the 900s. I think it's Wedbush Security. But Bank of America seemed to be the big check mark. And I say that because if you want to go back to the daily chart, where it peaks out happens to be right around that 1040 mark. So it just kind of makes me feel like Bank of America's price target definitely influenced the market to a degree here. But let's now look into what kind of caused the crash and that comeback. So this brings us to the big crash. And as far as I could tell, and most analysts out there could tell, is this all revolved around NVIDIA's earnings. Those came out, I want to say, February 21st, somewhere around there. So NVIDIA had these high expectations, and rightfully so. They've been growing tremendously. And they put out a revenue guidance of $20 billion. They had gross margins around 75%, operating expenses around $3.1, $3.2 billion. All sounds great. There was never a doubt, at least in my mind, that they would miss their own expectations. But what analysts like to do is they'll come up with their own expectations. So most analysts, they saw, okay, $20 billion, but we know NVIDIA generally likes to overachieve. So most analysts actually went into this thinking, oh, we're going to expect them to beat that, maybe put in 21 billion, possibly even 22 billion. And so that's what the fear was, is that, sure, they'll meet their expectations, but all the analysts want them to beat it. And that's where people were worried. Is NVIDIA going to beat that? And so what a lot of investors, it seemed, there was just such a big pullback. It couldn't have been more of a coincidence that they chose to withdraw money in preparation that if NVIDIA misses, a company like SuperMicro, who does a lot of business with NVIDIA, they're going to pull back too. Now, I don't actually believe that, because even if NVIDIA was flat, SuperMicro is so new and gaining market share that any new sales that NVIDIA makes, even if they stayed flat at $20 billion for the next, say, 2-3 quarters, SuperMicro is most likely going to keep chipping away, gaining market share there. But again, that's not how the market wants to see it. They're just going to see, oh, NVIDIA is going down or staying flat. That means everyone else is going to be doing that too. So what most investors, it seemed like, did is they withdrew their money in preparation that NVIDIA was going to miss. This ultimately impacted SuperMicro. A lot of investors withdrew their funds too. We saw that big crash. Then NVIDIA actually beat the expectations and they guided higher, posting that we're expecting to do $22 billion, gross margins of 76%, operating expenses staying relatively flat. And then their outlook for the next quarter was $24 billion, so still generally increasing. Gross margins to be above 76, close to 77%, and operating expenses to be about $3.5 billion, so again, relatively flat there. But the main takeaway here is they met their expectations and they beat the expectations. So once that happened, we saw this big inflow of investors wanting back into both NVIDIA and SuperMicro. So we saw this big pop back up close to the $1,000 mark. It even hit $1,000 at one point, but then we see this pullback. So let's look into that. This brings us to the pullback that now lingers with the company. The only newsworthy item that could generate a pullback is the company issuing these senior convertible notes, possibly showing weakness as it's not self-sustaining in this instance and adds to its debt accounts. However, this is a great deal for the company from my perspective. Some of the key points I read were this note will not bear interest and the principal amount will not accrete. Further, it will have a stock conversion price of $1,341 upon its due date in 2029. The notes will be redeemable in cash at the company's option after February 2027, but only if the stock price exceeds that conversion of 1,341 by another 30%. To me, showing the potential that this company is already building in ways to alleviate the debt sooner and using cash as opposed to issuing more stock, potentially diluting the few shares it has today, which is nearly 60 million shares. As a comparison, this company compared to a Nvidia or AMD, both of those are in the billions of shares outstanding. So just pointing that out because this company generates billions of dollars and yet has a very small share count. To wrap up the notes piece, the company intends to use the funds in part to set up a call transactions as what appears to be a hedge, and the bulk of the funds will be used for working capital growth and business expansion. So the reason again why this may be viewed as a negative is the fact that it's debt, and this postpones the thought of a stock split, which seemed to be viewed as a fan favorite option for the company in order to raise capital. To me, this actually is a better long-term option. Let's wrap up by looking at the technical chart. As we look forward, you'll see the top set of boxes, red and green, running parallel to each other. This is my fair value zone right now for the company, which is between 60 and 80 times its earnings. If you've seen a previous video of mine on this company, you'll note that I'm narrowing and lowering the multiple used, mostly because of this seemed to be the support and resistance levels seen in the market during those big price changes up and down recently. That said, overall, we see a general incline looking ahead to the next 2 quarters based on management's guidance and my estimates. So right now, if we look at the bottom and we're kind of tracking this upwards, this is kind of how it should go. And you can kind of see it's following that. That said, we could see it pull back down to the very bottom, which for me right now is roughly 770. Now that could kind of wiggle around as markets open and close, but generally that is what seems to be the ultimate point of support. We'll of course see how this plays out. And then of course, resistance up here around 1020. And again, that's just based on that 60 and 80 times multiple. Overall, projecting ahead, we can see our boxes actually jump up due to, the next quarter's earnings taking place of the past year's quarter's earnings. We're going to see a healthy jump here, and I'm hoping and projecting that the stock will kind of show the same. Of course, this will be impacted by Nvidia sales, its own projections. But for right now, this is kind of the trend that I'm seeing. We also included this purple line. This is what Bank of America's price point was, that $1,040. That would be around 81 times its current multiple right now. So that kind of would be the top of my range. Now, again, if this works out as kind of written out here, what should happen is it should trade between these boxes. And then once we move into the next quarter, it will now, kind of keep that trend. The alternative is we might just trade sideways between these 2 boxes, not really paying any attention to the general incline. But then next quarter, I would expect, if it's still trading down here, it to pop up after earnings most likely. Of course, we'll see how it plays out. This is just kind of, I would say this is kind of the buy zone triangle. You can see below our slanted line and towards right now that's 60 times earnings multiple. So we'll see how it plays out, but this is kind of what I'm looking at. Feel free to let me know how you see it if you want to make a change or something. But that's it. Remember to subscribe, and thank you for watching.